Our guest tonight is Jeff Newhard with Newieco. I believe he has several Newieco companies. One of them is his capital partners, and that's what he's here talking about tonight. He does some hard money lending. He has a fund to do that hard money lending, and then he does some stuff in the note space. So we're here to learn a little bit more about Jeff. And I know he has a disclaimer because we're talking about money. We always need to have a disclaimer that you need to, do your own due diligence, but I'll let him read his disclaimer. But let's first start off and find out a little bit about Jeff. I think that's your next slide, and then we can come back to your disclaimer. Jeff, tell us a little bit about you and your company.
My name is Jeff Newhard. I spent 28 years in the military, both active and reserve, plus lots of other corporate and private businesses I've worked with. Got 2 kids. One's 33-year-old daughter. She's off and married and has her own family. And I've got a 20-year-old son in college. So I've got a good spread of family around, and I've got my significant other there. You can see her, Darlene. She's in the picture too. If I don't mention her, she gives me the dirty look. And so I have to always mention her and bring her into the fold of stuff too. As Kim said, I am the general partner of Newieco Private Capital and the Concierge Money Fund. We're pretty diversified. And before I get into that, I'd better go back and read my disclaimer, because as she said, when we talk about money, especially when you're in the space that I am, we have to have a disclaimer that says, even though you hear us talking, you hear our ideas, you hear our concepts, do not do this on your own. This works for us and us only. It can work for you if you follow the rules and the rules that are set out for us by not only ourselves and our own SEC policies and procedures that we follow, but we have a whole regimen of stuff that makes us basically, lack of a better term, legal, ethical, and moral out there. And I do this disclaimer too, because I also hear people go out there and try and duplicate what I do after they've talked to me, which is a bad thing because it can get them and themselves and others in trouble because they just don't know what they don't know, and they need to be covered. They just run headlong into something, and then it's a oops, and the oopses cost money and cost a lot of time, energy, and effort, and lawyers' fees and stuff to get themselves out of trouble. So having said that, you have been disclaimed. We are not lawyers. We're not CPAs, tax advisors, and or do we provide those services. So that is my disclaimer.
And I want to reiterate what he said in that disclaimer. I mentioned this at the meeting the other night with the self-directed IRA concepts we were talking about and the checkbook IRA concepts. We had a few years ago, we talked about those exact concepts in front of the room. We did this disclaimer. We said, if you're going to do the checkbook control in your IRA, go hire an attorney, do it right, make sure everything's set up, because if you just go out and make it up as you go along, you could lose all of your money and all your retirement money, and that would be horrible. And so the first thing that one of the people in the audience did was she just went out and formed an LLC, and somehow she got her IRA custodian to fund it, but she didn't go to an attorney and get it all set up. She just made it up as she went along. And I don't know if she ever got herself out of trouble or if she got into trouble, but it was very scary because then she was asking me, well, what do I do next? And I'm like, I don't know, not my expertise. So pay attention when we say consult an expert. All right.
Yes, and I am only the expert in my own Forrest Gump world here. So you can ask me a question and it works for me. It may work for you. I don't know. I just know it works for me. And I've spent a lot of time, energy, and effort and money making this thing work and get it set up and funded. So tonight, I just want to kind of go over what it is, what we do, how we do it, the reasons why we do it, and then open up for some questions after that, if that's okay.
That would be perfect. We'll let you go. I will, if we run into something that I'm like, hey, I don't know what that means, or somebody asks a question that we don't know what you're talking about, like you say some really weird word, or we didn't understand you, we'll stop you and get a reiteration. But if you would just go ahead, we'll turn it loose.
Okay, yeah, please do ask questions because it's in my head and I tend to know what's in my head, and a lot of other people don't know what's in my head. So, so raise a hand, ask a question, jump in, say, hey, wait a minute, whatever it means. What are we? Why are we different? Newieco Private Capital is an LLC, but we are also a SEC 506C fund. And then as such, we manage and we follow the SEC rules, and we claim some exemptions in those rules. For lack of a better overview of it, you can think of it as we operate as a hedge fund, a very, very, very small hedge fund, but we are a hedge fund and we operate under those SEC hedge fund rules and regulations. And as such, I formed our LP, which is the Concierge Money Fund, which is the first LP within the 99 remaining that go into an SEC 506C fund. SEC 506C fund is an accredited fund for accredited investors, 100,000 and over. But as we go through here, I can show you different ways that both accredited and not accredited investors can legally and ethically invest in this fund. And
Before we go much further, can we ask you a couple questions?
Sure.
So limited partner, that means you're the guy that started it? And you're the guy in charge?
Yes, all of the above.
And I've heard the term general partner. Is that in there?
Yes.
And what is general partner?
Your general partner is a sole person, or it can be multiple people that run the fund, manage the fund, do all the decision making on the fund, set up with, you can also have a board of directors that go along with that. That can be sub-limited general partners in there, but there's always one general partner. And that general partner usually is the first limited partner within the fund. And that limited partnership allows them to make investments not only for the fund itself, but for them as individuals too. So it qualifies them because of being a general partner as a fund manager and fund investor into the fund itself.
And then you said you were an SEC 50C6 fund. That's just a type of fund that the SEC designates, correct?
Yeah, so 506C fund is for accredited investors only. There's a lot of rules that go into that, but you can think of it as the minimum is you have to have a $100,000 investment and be able to substantiate that through your holdings, your other investments, your income, and other ways to substantiate that.
An accredited investor is somebody that they think is
Sophisticated, knows what
sophisticated, that you have enough assets and enough income to prove that you're sophisticated.
Correct.
And so if you make a screwy investment, you are sophisticated enough to know better or to know what you were getting into.
Yes, and you're sophisticated enough to know that you read the 104-page document I'm going to provide you, and what you're signing is knowing that everything is good to go or at risk, or your limits for your risk that all go along with that.
Okay, so you were talking fast, so we're going to slow you down.
Okay. I tend to do that sometimes. But why we're different, you deal with me and very few other people in what we do. Our space is to fix and flip investment into real estate. We only invest in single family to quadruplexes or 1 to 4 family units. And because we do that, we claim an exemption. You'll see this on in the charts later, that allows us to deal in mortgages for the fund. And that is an exemption that we don't have to do the in-depth reporting to the SEC, but we still have to report. And right now, if people know, there's state SEC levels and there's federal SEC levels. And there's certain thresholds you've got to meet at the state first before you start reporting to the federal level, even though you register on both sides. You're out there, you're operating at the state level, minimal reporting to the state until you reach a certain assets under management or AUM. And then you have to start filling out more forms and more forms for compliance and other stuff that go along with that. So most hedge funds, even though they're small, will start out, might as well do all the compliance stuff ahead of time. Then when the time comes, you have to start reporting, you start doing that paperwork and you know where to send it in, and it's already done. So in the background of a SEC managed fund, there's a lot of stuff that's going on. You just don't realize it's out there. Most mutual funds are set up similar. Any kind of targeted investment that you'll see out there is all similar stuff in the background, and we are doing all that stuff in accounting and compliance that's going on.
Okay.
So, but we're still small. You're still dealing with the decision makers. We still make all the decisions in-house. We're not necessarily farming those out to other people for our decisions on what we intend on lending on. And it's mainly a very simple process. It's not like going to the bank and filling out all the paperwork and going to committee and 10,000 people have to look at it before they tell you no. We're pretty simple to deal with, but we still have a process that we go through. A lot of that process on our decision making on whether to make a loan to an individual to do a fix and flip project is all in-house. We make sure that both sides have a win-win situation in the deal. Nobody wants to lose, so we're set up to where we help you win, you help us win, and everybody wins and stays in compliance along the way. And we're still a small shop, so we can do that. We haven't grown that much, and we don't have a lot of people that we're having to deal with, and I kind of like it that way, to be honest with you, because it makes things a lot simpler.
You're the second person I've heard that from on this call. We like a small shop, not a lot of moving parts, not a lot of people to manage, then we don't have complications.
Right. That makes a big difference. Here's some of the stuff I was mentioning earlier. The sub stuff that we claim exemptions on, since we are a private investment company under the 506 Regulation D fund area, we claim the 3C2, which allows us to be with 100 or fewer investors on the accredited investor side. And we have no plans whatsoever to go public or go to a RIT environment, real estate investment trust, which basically is the same thing I'm doing, but it's publicly traded on a stock exchange. That's the biggest difference. A few other little differences, but.
Are you able to, so I know I've attended a few classes about having a fund, and if I were an investor wanting to raise capital myself, say I want to go and rehab a house and I need $300,000, I can't necessarily just go out on the internet and say, hey, would somebody lend me $300,000? I'm going to pay you all this interest, and because I'm violating SEC. But I know there are certain types of regulation funds that you can put together with the SEC that would allow you to actually advertise for somebody to come invest with you. Can you do that?
Yes.
With this one?
Yes, as a 506C, and the C is the big designator, that allows me to advertise because I'm basically advertising to accredited investors only. Now, sub to that, there's always subs to everything. I do have the capability to break off into sub companies or sub funds. I call them special purpose vehicles that will allow me to bring in non-accredited investors for smaller investments and still be able to advertise for that too. So there's some specific rules, and then there's some sub-specific rules that allow different levels of funds to do different things. So having a C designation kind of says I can do it all, but I can only have 100 or fewer investors in the fund at 100,000 or more in money. But the accounting made really simple that way. There are funds like crowdfunding funds or A+ funds, and they'll take you for $10, and they've got thousands of people in there. Can you imagine the accounting on that and the headaches that goes along with? I don't even want to deal with that.
I have some money in something like that, and they have, they've done a hard money loan like you're doing for say $150,000, and then they're selling pieces of that loan at $10 a pop.
Yeah.
I'm like, I can't imagine the accounting for that.
Yeah, I don't even want to deal with it or try and figure out the K1s or anything. Staying at 100 or less, that's a good sweet spot for me. The next thing that we claim is a 3C5 exemption, which means we only deal in mortgages. And so because we only deal in mortgages, there's a ton of paperwork that you don't have to file that if you were doing stocks or bonds and other traded entity stuff out there. So that wipes out all that paperwork for us. And as a 3C7, again, that's another sub to the 3C1 that we never plan on going and doing an IPO anywhere and doing anything like that. And we
But
claim
you could if you wanted to.
yeah, we could if we wanted to. We just have to get rid of those 3C1s and 3C7 exemptions and take on more paperwork.
Let's keep it simple.
Yeah, that's the best thing.
So I want to interject for the people that might be wanting to know why they can't advertise on the internet or anywhere for money unless they're all papered up correctly with the SEC. We do have a video with Alan Cowgill that he talked about why you can't do it and why it's a violation. So if you're looking for that video, it's on our YouTube page somewhere.
Yep. And so moving on, out of the fund, this is how we basically do it. We advertise this. You can find this when I do feel like advertising. And to be honest with you, the stuff that I'm doing right now with not only investors coming in and people looking for loans or fix and flip funding, I do very, very little advertising. I do advertise, but it's mainly word of mouth and people that just refer and the like. And I get stuff all across the United States, and I'll lend in all 50 states in certain circumstances and cases. There are a few places I won't lend, but for the most part, there's probably only 7 large states I won't lend in. And those are New York, New Jersey, California, Oregon, Washington, and Nevada, and New Mexico.
Those are the states you can't foreclose in for like a year and a half.
Right. And then I won't lend in Cook County, Chicago.
Because they're crazy there.
Yes, very, very crazy. So we offer flexible terms. And when I say flexible terms, most people, and when you say hard money versus private money or private money versus hard money, I'm a combination of it. And a combination means I have private money. Everything we have is people's private money. We're a bank that is full of private money, but we treat it like a hard money loan. So don't expect to come to me and say, hey, I want a loan. And I just, oh yeah, I'll give you a check and off you go. Everybody's fat and happy. I treat it as if it were an official business transaction, and we do all the paperwork. And if I ever had to go to court for whatever reason, I got it all in front of me. It's in a book. And if they say whys and wherefores and why comes, I can just pull out my book and say, it's all right here. Here we go. Here's all the proof why we did whatever we did and what's being questioned. But for the most part, we are flexible. We don't have a solid 5 and 15, 5 origination points, 15% interest. We don't do that. On average, we'll start out with 1 to 3 origination points, 8.99 to 14.99, and we'll do 90%, 100% of the 70% of the ARV based on the value of an appraisal. We do everything off appraisals. We also love to joint venture and stuff, and joint venture and stuff brings people to a whole new level where we do some research on them, some background information, and make sure they have the ability to pay as long as they can joint venture with us. And we'll cover a lot of the costs, a lot of the upfront stuff, but they're still making the payments. They're still managing the project. They're still working with the contractors, requesting the draws and that kind of stuff. But we're handling all the back end paperwork. Again, that's paperwork on top of paperwork. But it takes a lot of the burden off of them so they can just manage the project, get it over with, and get it on the market and get it sold. So hopefully between both sides and the JV, we can all work together and come out way ahead.
So you're doing the bookkeeping on that deal, fighting with the water department like I do?
Yeah, I know you love independence.
Oh, Kansas City's been a fun too.
Yeah, and we do that, and it's kind of a give and take situation, and we do it different things on, we're creative. We're not the automatic 5 and 15. Here's your loan. Or what do you want to do? Do you want to come back? We want to work together long term. Let's make this work for everybody. So everything's kind of negotiable, but not negotiable. We're still in the business to make money, make our investors money, but at the same time, how we get to the end product is up in the air. It's whatever we can agree on, and everybody can come to the table and make it work.
Okay.
This is how I treat it. Creative real estate investing. I guess I've been doing this for so long and got so much into the fund and the lending and the note business that it's easy for me. It's easy for me to talk and forget that I'm talking about stuff that a lot of people don't understand or even know about. And in my case, I just sit there and I think about notes, I think about profit, and everything comes to me naturally. I guess it's just easy for me. But this next slide is how most people view it. Is you might as well be trying to get the Loch Ness Monster picture or that non-blurry picture of Bigfoot in the woods. That's how most people treat needing a loan or trying to do a project. But it really, once you do it, once you get to it and you build yourself into that comfort range, it's pretty easy after that. And when I say that, a lot of people I send this list to, this is the documents we require. At first glance, that thing looks like it's a lot of overwhelming paperwork you got to send us. But if you look down here in the right-hand corner, this is how easy it really is. We send you 4 documents to send back to us filled out, and you send us 10 documents that you should already have. That's how really simple the process is. And when people come to us and they start asking for loans and asking for money, and they start freaking out, wow, this is just overwhelming. And we thought you were private money. You're just going to write us a check and everything was going to be hunky-dory and fat and happy. But it's really more of a simple process and easier than a lot of people think.
I'm looking here, I'm like, that all looks like standard stuff that you either have to get a loan or you have to buy a house at the title company.
Yep, you got it.
The only thing I have never had to provide unless I was doing a rehab loan was the rehab stuff. And most hard money lenders want to know what the contractor's doing. So yeah, that all looks fairly simple to me.
Yeah, one of the biggest things we do different is we require the contractor to be licensed and insured. And it's not Joe Blow handyman down the street, because we want to know that you have somebody involved that's going to be able to not only manage the project, but be able to pull the permits without a lot of effort per se, and a lot of consternation on everybody's parts. So that just gives everybody a comfort level, even the investors, a comfort level that there's enough due diligence there that everybody knows what they're doing and can move out and make something happen. Still on the
So this is really super small and hard to read. Can we get I can email out a link to this page or this PowerPoint slide to everybody?
Yeah, I can send that out.
I was trying to actually take a picture of it. I don't know what I got here, but we'll see if it came through.
No problem. I can send a presentation to you.
Perfect.
And then a lot of people ask, well, the whys, the wherefores, or whatnots, what are you really looking for? And here's some examples. We do pull credit and we do a background check. But what you're seeing here, credit scores per se, we don't care. We don't care what your credit score is. We don't care what that stuff says down there about you. Almost everybody's going to have something that the credit agency is going to throw out there at you. But we're not going to come and say you got to have a 680 credit score or 700 before we'll even lend to you. We're not even worried about what that credit score is. But on the reverse of that, we do look at the credit score. If you're a first-time buyer, if you've got no experience, if you've got money but you don't know what you're doing, there's so many different scenarios that come into play there. We will use a credit score to figure out a percentage rate and where you'll fall in a percentage rate. And so if nothing else, and somebody says, well, how'd you figure out a percentage rate on somebody? We'll say, well, they've got a 679 credit score. So we charged them 899 plus 2 points with no experience. So that added 3 more points. So you're looking at, well, it's 8, 9, 10, 11, 12, 1399. So that's how we'll come up with a quick down and dirty figure and then go from there. Now, if you're what we call our premium borrowers, and that's anybody who's had five plus loans with us, you'll be at 899. You'll be at 899 all day long, because we like that repeat business and we like working together and we like working with people who know what they're doing. And so you can see the range there and how to get to the range. And it's just a matter of taking the time and not coming in. And I've had people come in and cry and beg and, well, I want the 899. Well, no, you're not getting 899. And also, you shouldn't be worried about the interest rates on the loans, because you should be in and out of this so much, whether you're at 899 or 1499. That's just a matter of a couple $100 a month in the big scheme of things. So,
one of our first deals, we just had a lender that was a private lender, and he lent us all the money, and we didn't go through all of this, but he wanted a flat fee, and we're like, sure, we'll pay that flat fee. And when I figured out how much interest I was paying him like 80% interest.
yeah.
But it was $5,000.
Oh, wow.
And in the grand scheme of things, when I made 30 grand on the deal and he got paid 5, well, I was perfectly happy paying him 80% interest.
Sure. And it's all the time value of money. And so the next thing we look at is the background. And most people come back between the state and national with nothing wrong. And it doesn't matter if you've got stuff on there, but really, we're only looking at were there any bankruptcies, were there any major judgments against the person. And we don't care if there's bankruptcy as long as it's 2 years plus. We'll still lend to you. You'll still pay a higher interest rate, and we'll still watch you a little more, but we'll still make it happen and make everybody happy. And then we look for liens, and this will trip a lot of people up. Liens being like IRS liens or federal liens, because they tend to follow the person and not the property. And for whatever reason, the majority of the people think it's for a property, and it's not. So this will trip some people up in the long run. Just
because if they buy that property, then that lien attaches to that property just because they're part of it, correct?
It sure can. It sure can.
And then you can't sell the property.
Right. Yep. And they'll tell, there are people who are, oh, that lien, I discharged that long ago. I say, okay, I'll show the proof. Nobody can ever show the proof. And then we ask them, showing reserves. This is how we weight reserves. And most people think, well, I just got to have reserves in a bank account. No, you don't have to just have reserves in a bank account. You can show us any kind of these accounts to show that you have the reserves and able to make those payments, the monthly payments and the contractor draws up front, because we do a draw system and we require the borrower to pay the contractors up front and get a reimbursement by task order after that. So we just look at people and say, do you have the reserves? And again, most people just think it's a bank account, but no, you can show any of this stuff to show that you have the reserves to be able to make those payments and make those initial contractor bids.
So what you're saying is when the contractor sends a bill, we're going to pay for that with our own funds, and then you reimburse us for it.
Correct.
Okay.
And so at closing, we may say, you got to show us 1,700 in reserves or 17,000 in reserves. It can be all over the place, but any one of these things would qualify for showing us you've got that. And we would take that amount on that document and show it at 100% or 50%. Okay, yeah, you've got the money. You can make the payments if need be, or if had to, if you didn't make other arrangements. The other thing that always gets people, I have third-party underwriters that I use, and the underwriters are not, they're not the monster. They're not the monster in the room. If I come back to them and I say, I need this document or I need a letter of explanation for this, I'm not using whatever my request is as a loan killer, because we're in the business to make a loan. We're using whatever our request for that document is to justify us making a loan to you as part of the loan package. So But if you did have a bankruptcy over 2 years ago, okay, give us a letter of explanation. What happened in your bankruptcy? When was it discharged? What were the dates and what happened, or vice versa? Small 1-2 paragraph, if that. Or all that thing on my credit report was my ex-wife's, and we don't get along, but it was all her item. The guy got dinged with. And they're all over the place. So we're not asking from an underwriting standpoint to kill a loan. We're just asking for documentation that shows what happened, or what happened with the outcome of whatever the case may be.
I don't think you get audited regularly, but you could, and the auditors would want to see this stuff, correct?
Correct. And
I had a friend that was a bank president. That was her job. And she says so many times banks make stuff up and then they get in trouble when the loan goes bad and they get audited on that loan and they don't have the real documentation to back it up.
Correct. So we over document really, but the over documentation is just to prove that you had the ability to make the loan and you discharged anything on the other end and it was out. Or one of the things that happens a lot is people come to us and say, I've got a property I want to make as a fix and flip and sell it, but I own it. Oh, I forgot to tell you that was my home. That's my address on my driver's license. And so we don't lend to owner occupants. So we'll have to have a letter of explanation of why your address on your driver's license matches the address of the house you're trying to rehab, and then where you're living now and proof that you're living there. Because again, we're lending business to business. We don't lend to individuals, but I'll show you there's an exception to that rule coming up, but we do in a roundabout way. But our main is business to business, and so all of our documentation has to show that.
Okay.
And then the final product as it comes out of a loan package, it's going to be long. It's going to have everything with its I's dotted, T's crossed. But it's going to be a beautiful document that if something were to happen, that if I had an auto accident tomorrow, anybody could pick that book up or that file up and know what's going on with that loan and who to call and what's happening with it, where payments are going and who's involved. So it's really not only a case of making sure we're dotting our I's or crossing our T's, but anybody could follow behind this and make this happen and make it work for everybody. And then on top of that, it's also a note. It's a sellable note. It's a note that has value to it. And so from a note investor standpoint, that's how we like to have our investors come in. Our fund will invest in the note. It'll create the note, and then we'll pay our investors from the profits off of that note, or we can break those notes out and sell them as partials or individuals with as less as 20,000 we can do, and still give a person a pretty decent return if they've got an IRA sitting around, or even just money sitting in the bank, just doing nothing, making very little to no interest. We can get them 7, 8, 9% return, better than a CD or a bond, and they're only in that for the life of the note if we're doing it for a non-accredited investor.
So that's like a 6-month or a year loan?
Yeah. Because we only do 12 months or less loans. And when we write these fix and flip loans for 12 months, we don't charge a prepayment penalty per se if they finish it in 3 months and roll it out and sell it or whatever the case may be. But a loan that we originate will 20% of them will roll out in 3 to 4 months and be refied out or sold or turned into a long-term rental loan or something. 70% will be from 4 to 11 months. And those are for whatever reason. Sometimes they take longer, shorter, stuff happens. And then the last 10% is 11 months plus. that they'll go in and they'll request an extension and stuff happens, life happens. But in a big scheme of things, all of our notes that we originate or the ones who we even invest in, because we invest in other fix and flip notes too, have a less than 4% default rate. And our notes, if we have an investor invest with us, in the big note world, people are always looking to buy notes and they want discounts and stuff. Well, we don't sell the note, we sell interest in the notes, where we expect par and you get par return rates because it's a good
Par
note.
is face value. So if he's selling you $100,000 worth of note at 8% interest, he wants $100,000 for that.
Right, and I'll give you 8% until for the life of the loan, and that comes from the day after the funds are received in our bank to the day that that loan closes out at a title company. That's 8% return on investment prorated for the amount of time that's out and the amount of money invested. And so you like that, then we can roll it into the next one and roll it and roll it, roll it. I like to describe it to people as a CD get at the bank. Usually it's a 6-month, 9-month, 12-month CD at 4 or 3% or whatever. Well, we're getting it at 7, 8, 9. So we can double those returns all day long and keep people fat and happy. We also,
and you make your money on the points and they're making their money on the interest.
correct. Now there is a little spread there. There's going to be a 2 or 3% spread, but that covers all of the servicing fees and all the insurances that have to be in place in case something happened. But worst case scenario, just worst case scenario, if that loan does go bad and we have to foreclose, you probably still make money, but it'll take a little longer. But it just comes at a different time.
It just takes longer until after you get the
Right.
property sold and your money back.
Right. And those fees that we get off of those, not only the monthly interest payments that we get from the borrowers, there can be other fees. There can be late fees for whatever reason, extension fees, fees that we don't like you fees, I call them, just because you did something stupid. But it's all in the paperwork that we have the borrower sign, that here's our fees and our fee schedule for stuff that might happen. Those are all prorated for the amount of the investment too. So, there are possibility that we can say you're getting 7%, but in the end, it ends up being 10% because of fees that got paid along the way. And that happens. It's kind of a nice surprise, but it does happen.
That's kind of like late fees and laundry income on an apartment complex.
Yeah, kind of. But and then we don't per se sell these off to other people, other note buyers, because by the time we did all the paperwork and got it filed and the new owner and the counties, the note will probably be already done and sold out and rolled out. So it's just easier just to launch those payments and those interest payments to the people than to try and do all the back end paperwork and then already have it done before it even gets sold. And so that when I said earlier that we have a lot of back end compliance stuff, that's part of the compliance stuff that we're dealing with, because we have all the front end of investment stuff that we deal. We have all the back end of paperwork from other people that are investing in our notes and our sub notes and in the fund itself. And there's 3 different levels of investment that we have to keep track of. So if you want to start a fund, it can be very rewarding, but it's a lot of work. It's a lot of work, but very rewarding in the end. We've talked about that. One of the things we do, and we've got creative here lately, seller financing. And when I say seller financing, most people think of we just turn around and sell it to the end buyer. We do it a little different. We create a first and second note to the end buyer, and we create the note of the first with enough that covers any of the underlying debt and any discount that we might have to do for a long-term note sell for a 30-year product. And so we create the note, sell it off at a very good rate of return and a very good discount in a first position to the value of the property for that 30-year note buyer. And we keep the second that we've created for mailbox money. That's free and clear money for us. So it may be only $75, $300 a month off a second, as long as they pay. But that's just mailbox money that is no money out of our pocket, but it's just coming in mailbox every month from the servicer.
And that starts from day one, or does it start like 5 years down the road?
Day one.
And this is seller financing to an end owner occupant buyer or an end landlord buyer that's going to hold the property and pay it off in 30 years.
Correct. Now that's the one time when I said earlier, there's some caveats to it that we will sell to an end buyer, but we do not do that ourselves. We use the RMLOs out there, and that's the registered mortgage loan originators, to do all that back end compliance paperwork for us. And they do anything and everything that's involved that will rack and stack that 30-year note product for us that makes it a sellable note for the note market.
Was that a note event? And they're like, if you don't have all this paperwork and you didn't go through an RMLO, please don't send me your notes. I will not buy them.
Yep. Yeah, it makes a big difference on the value you get. In the note world, on average, you may have to incur a 15 to 18% haircut off of a note to make it attractive for a buyer. But if you've got an RMLO that's racked and stacked all your paperwork, you're golden. You're golden. You'll get the best value you can for that note that was created.
And if you're using August REI for your servicing, they are reporting to the credit bureau, improving your borrower's credit rating so that they can refinance you out.
And that's a good point. There's very few of the servicers that do report. Only a couple that I know of will report. Most of them don't.
I use them specifically on one seller finance I did because my borrower, according to the credit bureau, was dead. And so we had to establish payments and payment history and credit history to prove he was not dead.
Kind of hard sometimes. But that's kind of a high level overview of between here's the fund, what the fund does, what it was created to do, and then how we service everything in between to create our notes and make a profit for everybody. Now, there's a lot more involved, but that's just kind of a high level overview of the things that we do and look at and try and alleviate pain for people along the way.
Yeah, that would be a 4-day, 5-day training class to go through all of this in detail. So.
Oh yeah, and if you do it the way I did it, it's thousands of dollars to the SEC attorney and lots of phone calls back and forth. Hey, can this be done? Can I do that? Is this really? So
these are the best ways to reach you. I know we usually find you at the MAREI meeting.
Mm-hmm.
Are you at any other groups in town? Do you go to the other events that we might run into you there?
Yeah, I'm at as many events as I can get to. If I'm not already committed to something else, I'm usually, if you see an event in town, I'm probably looking in the background somewhere, whether it's online or in person.
And did we have any audience questions? I know I was trying to ask the questions of the stuff that was a little confusing. We did want to get, if you can email me the slides we went over, I can put them in a PDF and I will upload them. So if you go to mareimember.com to the calendar, if you've attended or registered, I can upload those to the calendar, and I will also upload them to the YouTube page when I put out the replay, so you can get these in a larger format and be able to read them. But I will try to get them at least emailed out to everybody on the call tonight. I'll try to get them emailed out tonight if you're registered through the calendar of events, which I believe everybody should be.
No problem. I can do that. And I just want to remind everybody, please don't try and do what I do. Don't try this at home.
Well, you can try it at home. Just don't wing it.
True.
Get input. I mean, if you're going to set up a fund, roughly, I mean, what are you talking about to go consult with an SEC attorney and have them do all your filings? what does something like that cost?
Good question. And it will vary. And I guess my whole comment here is you're going to get what you pay for. You can do it for $10,000, but that's going to be an a la carte service, or you can pay as much as, like me, $75,000 and
Get everything you need.
get everything you need on an ongoing basis.
Okay.
And that it gets me long-term consulting
Yeah.
and
I would say the 10,000 probably would get you enough to get you in trouble.
yes, very.
And then but I've talked to, there's 2 or 3 people out there at the national level that train on this and speak on this, but I think they've both retired. I mean, one is a little older and the other one moved to Puerto Rico. So,
Yeah,
but those are at national training level. There's a lot more SEC attorneys that they're not out there speaking. They're just out there doing the work. So
yeah, they are. And then, once you really get in that loop with not only the SEC attorneys, but the fund managers that you get introduced to, it just opens up a whole new world to you. Not only a whole new world of investment, a whole new world of real estate, and you get all kinds of new stuff. You could easily get squirreled and want to go try new stuff. But my best suggestion is, and it's hard for me, is just do what you do what you paid for and what you want to do, and stay with that, and not get squirreled at every turn.
I know we went to a note investor and got into the note world, and it opened up a whole new world of investing that gave us more tools in what we're doing. But there was like hundreds of new things that we could learn. So it was just shiny object after shiny object, and it was overwhelming for me.
Yeah, and it does. It gets anybody and everybody. I see it all the time. And I know I can sit there and I can talk about how to make a loan or doing a loan. And then if I mention a note and somebody says, I can invest in a note, and then all of a sudden they're squirreled and I'm talking about notes. And so I'm back and forth all the time. I have to stay focused myself.
Yes. Well, we're coming up on an hour, and I don't want to keep everybody here all night. So I think we've gone through your presentation, and I don't have any extra questions coming in. So I think we'll go ahead and wrap up. Do you go to Angel's meeting on Thursday morning? The what is it? Real estate property shop?
Yep, I'm there usually.
So if you want to talk more about a specific deal or need help putting together a specific deal, I know Angel does her real estate property shops on the calendar. It's at 9 o'clock on Thursday mornings, and Jeff is usually there, so he can help you. If you have a problem that needs resolved, then he might be able to step in and help you get creative.
Yep, sure can. Be happy to.
All right. Well, I will go ahead and end it for the night. I will see everybody possibly in the morning, although I have a presentation I'm doing at 2, so I have to work on that.
Thanks for having me.
So if anybody's going to be at Keller Williams in Overland Park at 2 o'clock tomorrow, I will be there.
Thanks, everybody.